Hey, this is Bill Gross, the LA probate expert. And as part of my real estate business, I'm always on the lookout for good investments in real estate, both for myself and my clients, and really all around the country. So many of us in LA are looking outside of LA to find good returns and investments that we think are safe, are going to grow and do well. And one day I was watching a presentation by our guest today, Don, about investing in camper, happy camper capital. I'll let you describe what that is in detail. So, Don Spafford, thank you so much for making your time today available.
Yeah, my pleasure to be here. Thank you.
So, give me how do you describe, what do you do for a living, Don? How do you describe what you do?
Well, I guess the simple way to say it is we provide high return investment opportunities to other people to invest in our deals. Keeping it simple, and we do that through investing in RV campground resorts. So it's not just the RVs themselves or flipping things like that, but it's more like the whole entire resort where you go with your RV.
Got it. So, not multifamily buildings, but RV campgrounds, which has, I guess, different capital improvements and different
Right.
streams of income that you generate your revenue returns from. So let's go to the beginning. You said high returns. What kind of returns do people get or expect?
Yeah. So obviously, keeping things very general, without specifics here. Um, in those that have looked at other, at least multifamily syndications, for example, you have something to compare to. We're generally about double what you'd see on most of those. So our average deal, we target about a 15 to 20% cash on cash. Average over 5 years. Year one, of course, will be a little lower, but by year five, we're up to pretty high. So average over 5 years between the 15 and 20%. With generally that brings us around a 25% annual IRR. 25 to 30, which in most deals, equates to basically 2.5 to 3x multiple, over that course of that 5-year hold. So basically, keep it simple around. So you put in 100,000 into an average deal, you're going to basically maybe double your money just from the cash flow, and then double it again from the equity. So basically, put in 100,000, you get 300,000 back after 5 years.
Fantastic. And the property types, RV resorts and campgrounds, do you do value adds? Is this something that you're buying and doing improvements, or are they cash flow when you buy them, or how does that work?
Yeah, well, they're both. We thanks for bringing it up. We do. There are value add where we are purchasing existing campgrounds that are cash flowing day one, which is why we get those high returns. And so we pay those out, right away. We pay them out quarterly. So by the time we close on a deal, that next quarter end, depending on when that happens, the close, you start getting your first distributions of the cash flow from that.
Wow.
And then of course we do, like I said, we do the value add throughout that process on doing improvements to kind of just improve the property itself, to improve the amenities, bring in new amenities and things that will attract people to come to those sites, and as well as we typically do some expansion, like we'll add on more campsites.
So I have to admit, I've driven by campsites, but for me and my wife, roughing it is a Holiday Inn. So I'm a little, I'm not exactly in Green Acres. I'm not out in the backwoods. I grew up in a semi-rural area, but once I left high school, I never went back. So describe for me, these aren't just places that people park, like a trailer park we have in the city
Right.
where there's mobile homes and people live there. These are places that people go for vacation, bring the family, and then while they're there, they expect to have certain amenities to make it recreational and pleasurable. So describe for me what a typical property might include.
Well, that's going to vary by location, obviously. Areas that are like from the southern states where it's warmer are going to have different amenities than the ones that are in the northern states, like say Montana or something. But typically, we want to do things that are going to attract people to come there and have fun. Like you said, these are not this the side of the road places you're pulling over to park and sleep and move on to the next day. Comparing your analogy for hotels and things, right? If you're looking for a place you want to stay, someplace nice, it's got like the pool and the spa and the food service and things, nice beds. You'd go to something higher end like that as compared to like say a Motel 6 where you just want a place to sleep and go the next day. You don't care. So it's kind of what we're looking for. We're at that resort level type of campsites, not these overnight parking and going places. So you're going to see generally like pools, possibly concert venues. We do a lot of things, not just for the campers that are there themselves, but also to attract people in the area to come there and have fun as well. So we could possibly have some concert venues, If there's some type of a water feature like a lake or river or something, you maybe see some like paddle boards or boat rentals, potentially some golfing nearby or go karts to get around the place. Of course, there's going to be convenience stores and laundry facilities and things like that. People are going to need that general stuff anyway, just while they're there.
Well, it sounds like fun. And then are these other amenities separate cash flows, or are these costs you put in? You put in, restaurants. Is that a stream of income selling sandwiches and Cokes and prepared meals, or is this a cost thing that you have to put in to upgrade your facilities and get the rentals from the units, or both?
Right. Well, there's going to be some of both in there, obviously. Some things like just having nice, clean restrooms and good, strong Wi-Fi for people that are doing the remote working,
Ooh.
for example. They want to have that. We probably won't charge for the use of the Wi-Fi, but things like you said, like the restaurants or the convenience stores, we'll have that cost in there that will provide some income for us. Like typically, if we have a restaurant on site, we're not running the restaurant ourselves. We rent out that building to a local restaurant that wants to come serve the people there. So we would get cash flow from the rental of that property, and possibly a certain percentage of the gross profits that the business creates as well. But yeah, typically with most campgrounds, we're going to see, I'd say, an average about maybe 10 different income streams. The primary being, of course, from the campers themselves renting the campsites, but then there'll be things from those like restaurants, convenience stores, rentals of like paddle boards or boat rentals or things like that. So there'll be multiple different income streams that all feed into the property.
Wow. And I think this thing struck me when we had a chance to talk previously, kept preparing for today. After I saw you in a group setting, we went on one chat. This is like a whole world. I mean, hard for me to believe. I'm not putting it down. It's just different. And I think we all have our own ambitions and pleasures in life. But I didn't imagine there was such a thing, but it makes sense that if there are people driving around in fancy campers, there's going to be people who want to accommodate them and earn their business by making your location the place that they want to be. So let's talk from a business sense. Tell me a little bit about happycampercapital.com. Where are you at in your business cycle, and what are you looking for?
Yeah, so we are definitely in the growth phase. So we are a relatively new company overall as far as syndicating campgrounds. There's, I'm sure you and most people listening here have probably never even heard of investing in campgrounds before. It's relatively unknown and niche, and even more so providing as a syndication for people to invest into. So with that, we are striving to be the leaders in this space for campground syndications. There are a few other groups that I know of that are also doing it. We're of course trying to have our names be out there and be recognized and be known. So when people think of investing in campgrounds, they'll think of us. So we currently have, as is right now, 2 deals that we've already closed on. We've got 2 more that we're expected to close on this month. And we've got several more that is in our pipeline. So, by the end of this year, we hope to close on at least a dozen properties in our portfolio.
Wow.
And then, at least that, if not double that by next year as well. So yeah, we've got lots of deal flow for sure. The one thing we are, constantly striving for, of course, is additional investors to come into our deals with us because, as we have our own investor pool, everybody at some point runs out of their investable funds anyway. So we have to therefore continue to bring on additional investors to help continue to fund these deals and provide these great returns to our investors.
So you mentioned you closed on 2 on your website. You have 2 projects. So are those available for investors today to look at, or are those just samples of things you've done already?
Yeah, so the ones when you going into our website, the ones you'll see there are ones that are already closed on that you cannot invest in. To see the ones that we have available to invest in, you'd have to register on our website to get into our investor portal to have access to those. Because most of the deals we do are 506B, which means they are for non-accredited investors, which means pretty much anybody can invest in them. But with that, there's also certain SEC regulations that do not allow people to invest in our deals unless they have some type of a pre-existing relationship. So we'd have to talk with you first to get to know us, and then possibly wait to invest in the next deal with us.
So just going online on the one you closed already, excuse me already, I see Beyonder. Is that like your trade name or your branding for your sites that you're using, Beyonder?
That's our campsite management company. So we have a sister company called Beyonder that does the campground management, both the software and of course the staff and people on hand to handle the hiring and management of those campgrounds. So that's kind of like you look at like some of the other names out like KOA type thing. KOA manages their campsites. So we have Beyonders, our campsite management. So anything that we purchase and close on, we'll get that beyond our name attached to it.
Got it. Okay. And so here's a picture. This is a particular property, excuse me, that you guys closed on is Little Farm. Where is this? I just lost my spot here. This is
Yeah,
in
that's in Southeast Indiana. So just
Southeast,
the other there, that the little map is just outside of Cincinnati.
just outside of Cincinnati. And so these are the spot. I can hover over it. So in the middle, there's some sort of a lake or pond that people can play in. There's a nice swimming pool to the side, and then there's other facilities. In this particular investment, your offering was $3.4 million. So that included the purchase price and I guess improvements. Do you remember by chance what percentage the improvements was?
I think that 3.4 was actually the purchase price. Our total raise on that one was 1.9 million, I believe, offhand, which includes the down payment plus the capex for the improvements and expansion.
And so the target return was 11%, and your target ARR was 23% over a 5-year period. So again, that's where you get down to basically tripling your money over a 5-year period. And this was $50,000 minimum, so this would be, you include unaccredited investors as long as they went through the process and interviewed with you. So that's great.
Right.
So if somebody was interested in this type of an investment, I guess also interested in these type of returns, who's not, for this type of investment, and meeting you, they would come to your website and then would just contact you, or what would the best way to get them to?
You'd probably go to the investors tab there, and then put in a investor registration. Yeah, therefore they create an account there, and then even before you get full access, there's like a 2-step approval process. We'll see a memo saying that's Joe Smith registered on the portal. We check our team if anybody knows this person to give them access. If not, then we'll try to contact that person directly first to say, hey, did you hear about us? And then set up time to talk. After that point, as long as we know they're a legit investor coming to our portal, we'll grant them access at that point to create the password and have full view of everything, because we do provide full transparency on all of our deals. So there's a lot of information there that we have to have people sign an NDA before they can get access to. Just to kind of give the some I guess privacy and considerations for the deals that we're working on that have access to the seller's personal information and whatnot. So yeah, we like to make sure that people are getting into our investor portal are legit investors that are serious, not just some random robot or person trying to get in there to get some personal information.
Well, you have to be too legit because I got in, so it's not that hard a process. The bar's kind of low, I hate to tell you. No, I do appreciate it. We met and appreciate the process. And then you sent me some emails showing me different projects. Like I said, I think it's a fascinating concept I don't know much about. And I think that for anybody who's traveling, if this is your lifestyle, what a great way to invest money. And you go check on your investments. And I imagine then your trip becomes deductible or could be deductible. Talk to your accountant. So fantastic. Right. And then I also see that you guys are involved with a podcast, Wealth Watchers podcast. Tell me about that.
That's correct. Yeah. So that's kind of part of our I guess, internal overall goals and what we're striving to do, which is why our deals are, like I said, they're open for non-accredited investors, mostly. We have done a few accredited investor only deals, but mostly for non-accredited. And the reason for that, and the same reason for the Wealth Builders podcast, is we want to help reach more people to help them build their wealth and become accredited investors over time. So that's kind of the point of the Wealth Watchers podcast, also to provide additional financial information and insights to help people to improve their personal finances, improve their investment strategies over time to grow their wealth and become accredited investors. Wow. Whether that be investing with us or not, but either way, it's to help them to just learn better ways to and it's not just only real estate stuff. There's things on there, of course, in regards to just about anything personal finance related, to help people just to learn and grow. Great.
Well, and again, if you're looking for more information, of course, on the back of your Zoom screen, because you're so technically advanced, happycampercapital.com is a website, happycampercapital.com, and reach Don directly, don.spafford, S-P-A-F-F-O-R-D, at happycampercapital.com would be a great way to get in touch with you, or go on the website and log in there, or watch the podcast and learn more about it when you're ready to reach out at that time. Don, I really appreciate you guys offering the information to the marketplace and sharing with my fans and friends and family of this investment opportunity. Look forward to learning more about you myself personally as well. Thank you so much for your time today. I really appreciate it.
Yeah, I appreciate you taking the time to talk. Thanks a lot.
Thanks.